Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. Happy Tuesday, everybody. Hope everyone's doing great. All right, so as always, we're going to be taking some questions, taking a look at some charts, and sipping on some coffee. If you're joining from the Simpler family, I sent out the notes that I'm going to refer to here and some of the market commentary. So you guys have the notes. I might do that a couple times a week when we do our charts and coffee. A lot of folks have been asking about some of these notes. So I thought, hey, why not share that before we get started? In fact, you know what? For those of you that are joining via, well, whatever you're joining via, here is the link. And let's see if it goes through. It should go through there. And you guys can check out the notes as well, okay? All right, so let's get started. What is a morning without a question from my friend James? How are you doing, James? Good morning. Reviewing the 1-2-3 wave reversal. Is Apple a candidate for a breakout once it has passed the 1 point? Okay, so the Fibonacci break of 127, the extension is not necessary. It's great if the swing high is corresponding with some sort of Fibonacci number. So let's talk about Apple and the 1-2-3. Now, for those of you that are not familiar with 1-2-3, this is a very old pattern. It's a Charles Dow pattern. And here, let me show you what it actually is. Let's see. There we go. So that's really what it is. And it's the way in which we transition into an uptrend. I like them best as trend reversals, but they can also be cues to trend transitions. A trend transition 1-2-3 would be something like what we saw in the NASDAQ. In fact, in the notes, check it out. There's 2 short videos that I posted that we discussed this pattern a couple weeks ago, as well as the lower end that was setting up for a buy. So check that out. Once you recognize the pattern, you don't need me to point it out. You'll be able to see it with a whole lot more ease. Now, is Apple setting up something like this? Ideally, a 1-2-3 is a brand new 12-month low or high, depending on what you're reversing. Ideally, it's also a reversal from a previous trend. So Apple is going to be more akin to what we see in the NAS, where it's going to be a little bit more of the continuation type. So yes, if we can take out the swing high, call it 127.20 to about 129, that area, we've got 2 swing highs there. That would be the completion of a 1-2-3. But I'll focus on the wave, 34 EMA on the high, James, and I'll take a look at 127.25. Breaking that, I believe, as we get up through the mean of the V-score, we've already got an MACD positive. This would be a really good, I think, a solid look at it. Yeah, it's the different indicators that I would look at for the environment that would favor higher highs. We're looking at it in Apple. So great question. Now, again, you don't need the extension, but if it's in play, that makes that level stacked. Stacked meaning what? Kind of by channel, you guys, you definitely should check it out if you ever have not. Simon Sinek's Start With Why talk, his original one, the TED Talk. I think as a chartist, as someone who trades, multiple whys at a particular level will trigger interest from different groups. So if it's a Fibonacci level, that's the Fibonacci group. If it's a swing high, those folks are looking at it. If there's a moving average, boom. If there's a VWAP, right? So multiple whys are going to help. Have more than one why. It definitely will help. All right, next up, hey, there's stocks, options, and more. When would I call a market extended? So how would I call a market extended? What would be the reason for me to step back and say we've got a parabolic market? So number one, I don't believe in extended markets because that period of time can last for an unforeseen amount of time. So what I'll say is I want to be cautious about more dramatic pullbacks in a parabolic market, which is typically going to be more than 1.5 times the daily price movement range. So yes, we're using a volatility measurement for that. Are we 1.5 times the daily price movement range for a symbol, regardless of what it is? And the other thing I will say is how many standard deviations from the mean, whether you're using average true range, whether you're using a volume weighted average price, how many standard deviations from the mean have we gotten through? Are we at, for example, the upper end of that standard deviation range? I'll use volume weighted average price for that, but really another very popular way to do it is the average true range. So average true range for me and daily price movement range are very similar. And so if I can layer on, stack a volume study, even better. All right. So let's see. Next up, hey there, Alex. Amazon. Not a double green yet, yes, but it is breaking through major resistance. My thoughts on Amazon, sure. So taking a look at Amazon, have we taken out some major resistance? Yeah, we've taken out a longer term point of control. That is what that white line is. That is drawn in automatically based upon a look back using volume of where the most volume has occurred within a set period of time, hence the look back. And we've taken that out. Again, we have a 1, 2, 3 here as well. 1, swing high, 2. You could say that broke it, but it never took out the lower low. So, that's still a valid 1, 2, 3. That's absolutely still a valid 1, 2, 3 type pattern. But I'll tell you what, in chop, am I going to tell you to focus on that? Again, one of the dangers of patterns is taking them out of context. And by that, I mean, you don't want to be in a situation where you're looking at these patterns in chop. So I would say it's much more important that we broke the wave. It's much more important that we've taken out those swing highs, that we've taken out those volume levels. I don't love Amazon. I got to be straight up with you. I think there are other tech stocks, mostly in semiconductors, that look far better than Amazon. Why? Because they're already trending. They're already in much better structured markets. They've been continuing higher for longer. So I don't want to just jump on a market that's suddenly taken off, chasing the calls at premium. I don't want to do that. I think that there are a number of semiconductors. I think there are a number of discretionary stocks. I think there are a few stocks in the communication sector that are all part of that tech narrative that look far better than Amazon. If you like breakouts and you don't mind paying up, go for it. But this to me is very reminiscent of the pattern that I shared with you all in the NAS and in the QQQ and some free videos. And I included those free videos in the notes. So scroll through the comments. I did share that those notes with you all. I think you're going to find them super, super helpful. Again, if you're in one of the simpler rooms, I shared that note with the link to this show. So check that out. I think it's going to give you a lot of basis on some of what I'm looking at for this week and some of the patterns. So very similar, right? I mean, this looks a lot like Amazon. The problem with Amazon is, see how clear a trend we had preceding the chop? This is an easy 1, 2, 3 continuation, right? Okay, so thanks for the question. Yeah, that monster can't trade sideways forever. Very true. I mean, if you want to look at where there's going to be a lot of impact from Amazon, take a look at XLY for sure. Can we take a look at Square? Sure. All right, so Square, again, not trending, not particularly bullish. It's a little disappointing that it did not join in on the NAS party. So while the confetti was flying in tech, Square did not benefit. Doesn't mean that I don't like it. It's just not necessarily breaking through VWAPs. It's not necessarily breaking through volume levels. It's just not there yet. So I would wait. I can't say I'd prioritize it at the moment, Tommy. Thank you for the question. Doesn't mean that I take it off the watch list. It just means I can't prioritize it yet. All right. So let's see. Oh, Simon Sinek. Yeah. Sinek. He's a start with why guy. He's the guy that talks about know your why. I think it's a worthwhile exercise. It's not a trading thing, but everything's a trading thing. And if you've been a trader for any length of time, you know that everything is going to impact your trading in so many ways. All right. So yeah, check Karthik. Yeah, check out that workflowy link. I love this service. I share this every day. Now, this is not the link that I'll share once we start day trading. But I thought, you know what, let me give you guys some resources and some things to check out between our Charts and Coffee episodes. And I think what tickled me this morning is I found an old article that I wrote for Trading Markets back in 2006. I was writing for them in the early 2000s, and I found some old articles. I was looking at the dollar, and I came up with this old dollar analysis that I wrote in October 24th, 2006. The internet is a time machine. It's amazing. And it's fascinating how my verbiage might have changed a little bit, but I'm still looking at the same stuff: relative outperformance, looking at the economic calendar for hot zones, and looking at where that US dollar is heading. So I thought that was fairly hilarious. Speaking of the economic calendar, make sure you make a pit stop over at Forex Factory. Today, you don't have a whole heck of a lot in terms of data other than the jolts. Look, the market already got a jolt, literally and figuratively, from the non-farm payroll of Friday. We do have the jolts job opening, which is typically not a super high heat hot zone. Again, what are these zones we talk about? They're volatility and volume events, gang. And we've got one setting up tonight. And if you check out the first come, first serve, I think I shared that with you too. First come, first serve strategy that I use for crude oil. Check that out. It's in the Countdown Trader. If you haven't checked out the Countdown Trader, it's countdowntrader.com. And I talked about this first come, first serve. This is something that will set up for tomorrow, where we look at the API numbers going into the EIA. Both of those are hot zones, high volatility, high volume events with a lot of attention. And so if we can look at the psychology and the levels that are plotted there, we've got the opportunity. So check this particular blog post out. You might have to go back a little bit. This one was written back in December. And so this is an intraday strategy that we use on crude. And speaking of crude, those of you that are in the futures room and in the Sector Secrets Mastery, we're watching crude oil right now for a move back to the upside. There's a lot of bearishness in crude, while the narrative about forward month contracts are pretty bearish. We haven't broken through levels to tell me that narrative has traction yet. So today's API and tomorrow's EIA hot zones are going to be really important in terms of whether or not we can gain some traction and move back higher in crude. And remember, what does that mean for the oil stocks? Well, we're going to talk a whole lot more about that in Sector Secrets and start to set up more trades that could take advantage of that move higher. After all, we are in reflation. And if there is maybe a point that we could see a pause in the US dollar, I think we're getting close to that, right? And the only place where the dollar short is still working right now is the Canadian dollar, but I am looking for that dollar rollover, which just kind of throws fire on fuel on the fire of this reflation trade. So check out the notes. All of that will just click. Really basic analysis that you can use, well, today. Plug. Sure, downtrend. Look, these are some of those markets that were just hammered when we rolled over in tech, and Plug and Blink, and this is definitely one of them. Now, see this 200 EMA? This actually reminds me a little bit of something I pointed out about silver in the notes that I've shared with you all. 200 EMA, kind of bouncing along a -2 standard deviation of the volume weighted average price, clinging to a volume ledge. This could be interesting, but we're a double red market right now. I would have to wait for a reversal. This is where, rather than the 1, 2, 3 continuation, this would be a 1, 2, 3 wave reversal potential. It's not there yet. I would be patient on Plug. And what I mean by that is I don't have a setup right now, but I think we could just keep an eye on it and see how it develops. Dividend stocks, how to play dividend stocks before and after dividend dates. Sailing, for example, VZ, sure. So here's the thing. I will never, if a stock pays you to own it, that's a whole different conversation. That's on a trade, right? That's more something that goes in my investment, my portfolios. And I love aristocrats and I love dividend stocks, but that's a whole different part of my market life. So if I'm looking at say Verizon, I'm not going to take this dividend event, which is a mild hot zone. I'm not going to take a dividend event or even the earnings that are coming up, which is a more major hot zone. I'm not going to take it out of context. The context is it's what's the structure of the market? Am I in an uptrend? Am I in chop? So as a general sort of knee-jerk reaction, before dividends, we'll typically see a ramp up. And then after dividends, we'll typically see a little bit of a sell-off. But that's more like a tendency. It's not a guarantee, of course. Mike says, love that book, Start With Why. Yes. Another good one, and I'm trying to see which bookshelf of mine it's on. Oh yeah, this one's good too. I wasn't kidding. I read all this stuff. Find Your Why is actually really, really good. I actually like Find Your Why. It's more of a workbook type and really nice big print. But it's a workbook. I like the Find Your Why quite a bit. Okay, let's see. Thoughts on stop hunting. So, I have a very different view. So picture this. I'm at an expo and I'm with someone who's, followed my work, and he's trading micro Forex. This is when I was doing a lot of Forex work in the early 2000s. And he said, the people on the trading desk are stopping me out. I said, really? They're watching your trades. I said, yeah, what kind of size are you moving, man? And he says, well, I'm trading micros right now. So you're telling me that someone's on the desk dedicated to following your 100 lot notional value trades. And there is no talk. If someone believes that, I'm not going to waste my breath trying to talk them out of that, because they believe it. They believe the market's out to get them. That's the biggest bunch of bunk ever told, because what that means is that we are so large, right? As an individual retail trader, and the market is watching my order flow trying to get me. The market's not out to get you. You are a surfer on the ocean, and the ocean cares nothing about the fact that we're riding that wave, doesn't even know that we're there. And that's the power. That's the ninja power that we have. So do I think about stop hunting? I don't look at it that way, because and I get totally where you're coming from, Bill. There's just sort of insidious thing that the market's out to get you, out to get me. What I'm here to tell you is we're not even big enough to ping on the radar. What happens though is, keep this in mind. Before you think the market's out to get you and it's out to take your money and whatever else, realize how much you're setting yourself up for failure. The market is not out to get you. The market is an order filling machine. The floors, back in the day of the pits, is an order filling machine. And they'll say, well, yeah, but they're looking at stops. They're looking at groups of stops. They're looking at the herd. They're looking at where those orders are thick. So when they run the market to that level, and of course they do that, but they're running it to where the liquidity is, because a lot of traders get filled by just executing trades, right? This idea that everyone on the pit's out there speculating with their own capital is ridiculous. A lot of traders have the very important job of just filling orders. Right? There's the orders. And if they can get filled, why not move it to where there's a lot of liquidity and fill those conditional stop and limit orders, right? So if you place your orders with the sheeple, you're going to get taken out with them. So that's where you've got to understand order flow and size and major and minor psychological levels and volume levels. And you start to figure out, okay, do I want to use that liquidity, knowing that they're like magnets, that there's a gravitational pull, or don't want to get run over by them? So I don't believe that stop hunting is a myth. It just doesn't mean, I think, the same thing to me as it means to other people. The markets are an order filling or order matching, really, machine. Ask yourself where your orders are within the volume and the size, and then you'll find out whether or not you're in that mosh pit with them. Okay, so and the same thing goes for, say, order expiration. Look at where the open interest is. You know where the size is. That size is like a magnet, right? And if you keep that in mind, again, you can kind of ditch the whole, the market's out to get me thing. It doesn't even know how can the market be out to get something that doesn't even know it's there, right? That's the way I look at it, and know the power in that, right? Know the power in that. So I hope that makes sense. All right, so just like that, our 20 minutes are up. Which would I prefer? TXN. That's an easy one. TXN. Yeah, absolutely. TXN. Do I like Qualcomm? I do, Robert. I'm long Qualcomm. Yeah, I like it. And not long yet. Sorry. I have a long setup in Qualcomm. 1, 2, 3 formed, waiting for a quick pullback. So we do have a long setup in our sector secrets in Qualcomm. Yeah, for that reversal. All right. Got to go, gang. I'm going to head on over to the futures room. I'll see some of you there in just a few seconds. And thank you as always for joining us here in Charts and Coffee. I hope the notes today, go review them, check them out. You're going to find them super helpful. I handpicked some things that I think are conversations we've been having in Charts and Coffee for months now. So again, if you have some feedback, leave a comment either on Facebook or YouTube. And on your way out, smash that like button. Thanks as always for being a part of our crew. Be good to each other. I'll see you tomorrow.